We've seen President Trump come in and say, we're going to have peace. Iran's ready to surrender. Peace talks are coming in. This is the level where President Trump and Scott Bessent start to get worried, right? Because once again, our economy lives off of debt, cheap debt. We weren't as cheap as Japan was, and that was the whole trade. You could borrow for free in Japan, roll it over to the United States, and make 3, 4, or 5% on your money, basically risk free. That deal's done, as the 10 years now up at 4.45%. And so all these central banks are backed into a corner. These governments are backed into a corner with their fiscal situation, their deficits that are still running hot. And then you have the central bank in the United States that doesn't even want to play ball, right? They're working against us. The bond market has been selling off and has raised rates on basically in resistance of the central banks, but it's kind of doing the central banks a favor where they're not having to raise rates themselves. The market's already doing it for them, right? So we'll continue to monitor this situation. It's very interesting, the timing of Scott Bessent going to Japan to coordinate with the counterparties over there to make sure the currency interventions are going good, right? That the carry trade doesn't unwind too quickly. But the market's been calling the bluff. And as much as Japan wants to intervene in their currency market, every time they intervene, they're having to intervene at a higher level, and it's having less of an impact. Take a look here at the USD versus JPY pairing, and you can see that they intervened here to get this sucker all the way back down to 155. But here today, you're already back up to 157 as the yen depreciates again. And US dollar is appreciating today because now the market's saying, wait, the Fed can't lower rates. They need to raise rates because inflation's coming in hot. So that's strengthening the US dollar versus that Japanese yen. So this applies even more pressure to Japan. How long can they hold out before they have to raise rates? That's the question that remains. So we'll be watching that. But the solution has always been stablecoins. To drive more demand to this treasuries, which is the whole issue here, right? The 10 years going up, all these bonds are going up in the United States and Japan. How do you bring them back down? How do you drive demand back into treasuries? Stablecoins. Now, we're on the brink of the Clarity Act. We're on the brink of securing this up. It's a matter of national security, keeping our US dollar reserve currency status. Stablecoins are going to be key. We need full clarity to open up rules of the road for institutions and banks to come in at scale.